Welcome to another episode of Real Estate Investing Explained. Here's today's question. So to wrap up the show, I don't think we could record a podcast when we are now, late April, without at least talking about the coronavirus pandemic for a minute. So we've been into it for about 5 or 6 weeks now. How has this impacted mobile home investing? Is it an asset class that you expect to perform better or worse than traditional properties and strategies in times of crisis?
That's a good question. I'm liking it to the 2008 crash, 2009 crash. And there's some similarities and there's some differences. First of all, I think it's going to be, that might sound biased, but I think we're going to be sitting very well as individual mobile home investors. Or if you're buying the complete parks, you're going to be sitting okay as mobile home investors. There's going to be a lot of pain. There already is starting to be hurt and pain in the market. We're already starting to see, and this is just the first month. By the way, all my people that when I'm selling homes on payments, April's been great. I don't know how May or June or July is going to be, but I've had more people pay this month than usual. So I'm not seeing any sort of like wave of everybody can't pay and it's, going out of business. We are dealing with affordable homes. We're typically selling these homes as well. Remember, if people don't pay us, not only are they losing their home, but they get out of this whole deal. Like they're losing the opportunity to actually buy something. Everything they've put into this home, now they have the potential of losing it. So I haven't been seeing, and hey, in 3 months or 6 months, that may change. But I haven't been seeing people not being able to pay with regards to my homes and selling on payments. I have been seeing, and this is very early on, but I've been seeing an uptick of people that need to sell. Well, that's not true. Across the country, there's a decrease in sellers. Depending on where you are, there's between like 20 and 40% less sellers because people are just holding on to their homes. If they don't have to sell, they don't want to show them. They don't want people in their properties. They're not sure what's going to happen. They're waiting till this shakes out. But there's still sellers. But there's still sellers in the market. Now, if you don't have to sell, you don't necessarily want to sell, but we have been seeing an uptick because I said that we're seeing more sellers. What I meant is we're seeing more sellers, lower total overall, but we have been seeing an uptick across the country of people needing to sell due to coronavirus reason. They either need to take care of a relative that's in another state. They thought they had their home sold and then the buyer flaked out because they're holding on to their money. And now the sellers are like, crap, I need to sell I thought I had a buyer. Now I don't. Now I need to sell even quicker. Or they've directly lost their job. They're people that are living in a mobile home, paycheck to paycheck. They're working at a diner or a restaurant. They lose their job and now they need to sell. And we've been seeing that already. People dropping their prices from the 20s down to the under 10,000 because they need to sell their home quicker. They're losing their home. They're behind on payments. So it's already been a tick up in, people needing to sell. But I don't want to make it sound like, okay, as a mobile home investor, we're going to start seeing people that need to sell more, which we are. And really foreclosures haven't even started because you're not even allowed to, I don't think, across most of the states. And I don't even think we've seen the real wave coming is what I'm getting at. But the difference between now and 2009, when we had the same sort of different fears, but similar. The difference is mobile homes now, there's more people looking. There's more investors looking at the mobile homes and the prices are higher. Single family homes have gone up in price most areas around the country, pushing mobile home prices higher as well. So the difference between 2008 and 2009 versus today is that there's more buyers. So what I think is going to happen is we are going to see an increase in sellers, but don't think if you're listening to this podcast that, okay, I'm going to make some really sweet deals, like even more amazing than we usually do. I don't think that's going to be the case because you're still going to have the buyers there. There's going to be more sellers. They're going to have hardships, but we're still going to have to pay the normal amounts we do. We're still going to make our money back. When I said we're not going to get like extra sweet deals, I don't think. Sometimes we will, but I do think there's going to be a wave, but then we still have to act quick. Some things have changed. Some things haven't. I do think there'll be this wave. But we're still going to have to, have a reputation, act quick, know our numbers, still resell on payments probably. There might be less cash buyers out there, but there'll still be some. So some things will change, but I do think we're going to be sitting pretty well as individual mobile home investors.
It's funny you mentioned that you've had good payments in April. I have with my portfolio as well. I'm not in the mobile home space yet. I've mentioned that a couple times throughout the show, but my traditional rentals, we got paid, I think, a week or two early in April, and we got paid like 3 weeks early in May for everyone. We're already fully paid through May. And I said to my business partner, I said, what is going on? We've never been paid this well in ever. So I don't know what's going on, but we've been having great payment history as well. That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.